All right, welcome back everybody. My name's Austin. I've changed my opinion on DeFi cryptocurrencies. And actually maybe a better way to phrase that is more that I've updated my opinion on decentralized finance cryptocurrencies. Because generally speaking, I've always sort of had a healthy amount of skepticism. Not skepticism on DeFi, so to speak. DeFi has the potential to be revolutionary. Decentralized finance is the next inevitable step, in my opinion. And the innovations happening in this space right now could be big. But my skepticism was more with certain cryptocurrencies claiming to be DeFi, but then when looked into, are they even truly decentralized? Does it even really matter? Well, I've updated my opinion. Let me share with you why. First off, what is decentralized finance? Well, right now, today, legacy systems control every aspect of the financial services that we have. Right now, with banks, yes, you can get a loan, deposit, earn interest, but only because they let you. You can trade, get insurance, etc., but only because they allow it. It is a heavily permissioned system, which, by the way, we were lucky enough to be born into. Most people around the world don't even have a bank, let alone financial services. And that's scary. So something needs to change. Bitcoin, certain cryptocurrencies, certain DeFi projects fix this. With decentralized finance, imagine a global, open alternative to every financial service you use today. Savings, loans, trading, insurance, and more, accessible to anybody in the world with a smartphone and internet connection. Wow. And how is this possible? Well, smart contracts play a big part. Smart contracts are programs running on the blockchain that can execute automatically when certain conditions are met. So no longer do you need that middleman. Automated loans negotiate directly between two strangers in different parts of the world without a bank in the middle. And that's really the revolution here. That's why we're seeing so much money invest, trend, get into DeFi. And by the way, just for perspective, Bitcoin is DeFi. Bitcoin is the most decentralized. It is the most censorship resistant. Other chains may be faster, they may have more bells and whistles, but no other chain is more trustless or more permissionless than Bitcoin. Yet, in 2020, when you hear about DeFi, people are mainly talking about Ethereum. While Bitcoin allows you to be your own bank, DeFi allows you to access your own banking services, like lending, like borrowing, with no third-party intermediary. That's the revolution. I've updated my understanding that at the moment, not all decentralized finance is decentralized at this point, and in some cases, that's okay. The innovation here is just as much automated finance, because while all DeFi will be automated, not all automated finance will necessarily be decentralized. Let's look at 3 examples, and let me show you. Let me show you exactly what I mean. And this is a continuation of something that Pomp shared in our interview about a month ago. I know some of you have heard this, but let me just play you 45 seconds.
So DeFi in general, I look at DeFi and I kind of expand the definition a little bit more. And it fits into something I call automated finance. So if you look at automated finance, that's basically machines running transactions, interactions, all that kind of stuff. DeFi specifically is maybe not automated, but it's decentralized, right? And so you can still have humans participating. So the way that I think about it is 100% of DeFi will be automated, but 100% of automated finance, some portion of automated finance will not be decentralized, right? So the bigger opportunity is not DeFi, it's automated finance. And automated finance as a category will have some DeFi in there. I think that it has incredible value. And we've actually invested in a number of things that kind of fall in that bucket. But to me, it's less about the decentralized aspect, and it's much more about the automated finance element.
I like it. Okay, so the main revelation today is that moving forward, as an investor in the space, to me, we should expect that the DeFi revolution is going to be different degrees of decentralized. Semi-centralized, that's not ideal. Because why do you need a blockchain? You only need a blockchain if you want something to be censorship resistant, ideally decentralized to make sure it's censorship resistant. But these projects right now are essentially startups. And as an investor, understanding that automated finance in projects that are hopefully trending towards more decentralized will be the real winners in mass adoption in 5, 10, 15 years from now, in my opinion. So let's look at 3 examples, and let's start with sort of the poster child for DeFi lending and borrowing, Maker. Maker allows you financial services without a bank. Automated loans negotiated directly between 2 strangers, different parts of the world, without a bank. That's huge. Yet when traditional markets collapsed, the stock market, the NASDAQ, during the COVID lockdown of March 2020, Maker collapsed, exposing vulnerabilities in the project's governance protocol, and the leadership had to step in and fix it, which is great, but if they can step in, well, how decentralized does it make it? And the reason the team had to step in is because MakerDAO lends DAI for collateral in the form of ETH. Now, as the market for ETH dropped back in March 2020, MakerDAO's protocol automatically sells, and the recent market back then saw losses too dramatic for the protocol's auctions to keep up with. So they needed some third-party intervention to keep the project going. So this is a brave new world, and if it was just about DeFi, you wouldn't want any centralization, but knowing that the revolution is just as much automated finance as decentralization, hopefully somewhat of a combo of both, these are the experiments, the projects that we need to keep on our radar. Not all automated finance is going to be 100% decentralized. That's not how startups work. And all these projects are essentially like startups, innovation. These are sort of the growing pains of cryptocurrency mass adoption. Growing pains being we're watching the market sort of work itself out, sort of finding the perfect cocktail, the right amount of decentralization and automation that will lead to specific cryptocurrencies reaching mass adoption. Who will win? Who will lose? If, for example, we look at the projects Kyber Network and Chainlink, now this channel put Chainlink on your radar way back last year in 2019. We've talked about this before. The token itself is centralized. The top 100 holders collectively own 83% of all the Link tokens. For Kyber Network, 18 unique addresses hold more than half of the outstanding KNC. Yet, despite this, people are using it. Chainlink is killing it with the partnerships, including Google Cloud partnering with them last year, along with the majority of other DeFi / just cryptocurrency projects. And with Kyber, people are using it. The volume is slowly increasing. The network is slowly growing because Kyber, like many other DeFi projects, allows you that automated finance. So, in conclusion, I tend to think the projects that will really be here 5, 10, 20 years from now will be the projects that are trending towards more decentralized. Knowing that it's going to be a mix. It's not going to be 100% one way or the other. It's degrees of centralization. Cryptocurrencies that are trending the other way, more centralized, will inevitably end up just like the big banks, where a few entities control the vast majority. And while it's sort of inevitable that cryptocurrencies after Bitcoin, there's going to be degrees of centralization, the projects that are telling you, yes, we're a little bit more centralized now. For example, Synthetics. Synthetics is a project that their leadership generally admits, yes, we have sort of a hand as we get this off the ground initially, but our goal is to trend towards more decentralized. I like that. And it's definitely the case in other projects too. Other projects say it, but keeping tabs to make sure is what I'm going to do as an investor. Because truly knowing if something is going to be valuable 10 years from now is understanding that the value proposition is taking us away from things that look like this. Let me know what you think. This channel is run by 2 people, myself and my brother. These are just my opinions. But like always, see you tomorrow. Okay. And just for those of you sticking around, be very wary of scam ads popping up, paid for ads on YouTube, Google AdSense. Check out this tweet. Everybody needs to tweet Team YouTube and Google AdSense to get them to clamp down on fake crypto scam ads they are showing before crypto YouTuber videos. This is unacceptable and hurts our image and hurts our audience. Please retweet to get them to address this issue. The ad approval team, step it up. So as a subscriber to our channel, just be aware.